All right. So if everybody wants to go on mute just for now.
Yeah, if everybody could mute, and then Justin, I'm going to present Justin or introduce Justin in a minute. He's going to put it onto a PowerPoint, and then if we could keep questions till the end, and Justin's happy to answer any questions at all. If everybody's happy with that. Oh, now I can't see the waiting room. Does anybody know how I see the waiting room? When we're on shared screen. There we go. We've got somebody else coming in. There we go. Okay, if you want to share your screen then, Justin, and we'll kick off. Justin has been in the industry for a long time. I won't steal his thunder. He's going to explain to you what he's done, where he's been, and where he's going, basically.
Going mad here.
Absolutely. Over to you, Justin.
Okay. Thank you ever so much to all of you for attending. Hopefully I'll try and edify or provide some information from a financial accounting and a legal perspective, which is the seat that I'm very fortunate to sit in terms of where we are, what we're doing, how the scenery is looking, the landscape. Questions, obviously, you can ask if you want to, either through the group chat or via, we'll stop and answer any questions that are burning and need to be answered now, there and then. Failing that, as Jackie alludes, at the end there is a Q&A, a question please session at the end, just to allow anybody to fire questions. I mightn't have all the answers, but if I haven't, I'm a director for an accountancy firm, a director for a finance company. So if I don't have the answers immediately to hand, I will secure them and then come back to you later. So COVID-19, the agenda is very simple. With the COVID-19, the situation where we are now, CBILS, i.e. government lending, mainstream lending, business support, the navigation of COVID going forward, Q&As, and then obviously just the close and then questions. Quick background on me. Not that I'm particular, that's probably the only bit that I actually know more about than anything else, is myself. Property surveyor back in the 80s for Lloyds Bank, worked for asset funding for some years thereafter, finance director, managing director, broker lead at special projects for a funding company, and more latterly, management consultancy working for accountancy firms, legals, structured funding, i.e. finance companies. I've worked in the ULR litigation and prosecution market, so I'm used to contract law, finance, etc., etc. What do I do? Structured funding, cash flow funding, CBILS, which is a more new process, which is new to all of us, I guess, even down to the word furlough is a new one in many respects. Refinancing, which is particularly huge at the moment, where people are currently struggling and need to find ways of generating cash, primarily those rejected by the CBILS process. I can touch in more details on CBILS and bounce back if anybody wants that towards the end of the session. I not only talk about building and development funding, I actually do developments myself, so I understand the emotional turmoil that you all suffer, we all suffer trying to build something, the strategic problems, the deployment of staff, the health and safety issues, CPA, you name it, I face the same dilemmas. So with a degree of experience, I can talk objectively and hopefully positively reference the finance and the structuring of that. And the other bits that are on there, doing MBOs, management buyouts, accounting, forensic work, investigative work, and I do a number of non-executive directors roles for different businesses. Currently these are the firms I work for presently and the positions I hold. I also work in you'll know they're from Bush Housing, which is a housing association for vulnerable housing, which primarily deals with Section 106, your affordable housing and vulnerable people. So I've sat now on two companies that have been set up, which I've set up from scratch. There's only 9 of us in the UK that are capable of setting them up from scratch, and I'm one of the 9, weirdly enough. But anyway, so that's what basically in the background. COVID-19. I'm not going to feature on all the negative stuff because, quite frankly, I think we've all had enough. 86 days in isolation since up to the 17th today. We spend lots of time at home with our loved ones. We've learned and indeed done all the DIY jobs that we should have done. We have now possibly done. Learned how to use Skype, or certainly I have, and Zoom. So I've finally mastered that. I've learned a lot of Maltese because my wife is Maltese. So next year I'll be able to actually talk to somebody rather than look stupidly at them away on holiday. And more importantly, we've had time to think about where we are and contemplate the lockdown and post COVID-19, and what it will make, what we will make, and how we will be redetermined and redefined going forward. Help has come to us from weird quarters. You never would have thought the degree of assistance that we've had. The government have come to us with furlough for staff, which is now to be slightly changed going forward, in so much as it'll be a mix and match. You can work some of the time and furlough the other part of the time. So that's going to hopefully keep people actively employed rather than unemployed, which is a situation none of us want. Various grants for retail businesses ranging from 10 to 25 grand, and discretionary grants and assistance available there if you really fight and scratch. A bit like insurance companies, the first gambit with these guys is to say no or find a reason not to do it. I've found with a number of the clients that we have, dogged determination has yielded them some form of grant support, perhaps not what was on offer, but certainly something, and the determination has been successful. Government telling us to take payment holidays, to ask the VAT man for deferrals of VAT, tax, etc., which have all been very supportive. Please bear in mind that the revenue are charging you, irrespective of the fact that there's a deferral agreed, etc. The clock's ticking and they're adding a few pence to it each week that goes by. Corporation tax, etc. is all the same. The main buzzword currently, SIBLs, SLE bills or sleigh bells, which is for the larger business interruption loan schemes. That's the CLBILS. And of course, bounce back loans, which is a very fleet on foot product currently available. Name, address, company turnover, 25% to a maximum of 50 grand. Push a button, 10 questions, and in 9 out of 10 cases so far, people have been getting money quite simply and easily. C-bills and SIBLs is a far more complex process, which one or two or all of you may have tried already, requiring quite a bit of diligence, cash flows, and detail. It's more of a traditional lend, and as a consequence, it's a bit more lengthy and painstaking. But you know, it provides 250 grand without a personal guarantee, which, let's face it, 250 grand as a loan, standalone, is quite good to have with no guarantee, and the rates are quite decent. And overall, with no early settlement charges, it's quite a decent product. More detailed bounce back loans. This is what I've just been saying: 2 grand to 50 grand, 2.5%, 6 years, first 12 months, no payments, no settlements, and there's no setup fees. If you settle early, there's no penalty. And if you give the money back 11 days and 11 months and 28 days before the anniversary of the first payment, you can hand the money back with no ill effects. So it's a keeping some money in reserve, a war chest, just in case things become even more dicey than they are presently. The actual C-bills, 50 to 250, again, as I've just said, rates ranging from 1.4 to 8.9, 2 to 5, again, no payments, 12 months. That, interestingly enough, I had a conversation with HSBC, who queried why a client had taken a bounce back loan and then applied for a SIBLs loan, and they said they shouldn't have done that. Well, the determination of the government has varied. You are allowed to seek and secure a bounce back as an interim measure, with the view being that you're looking at the SIBLs loan as a more long-term strategy. Obviously, the balances available to you are much higher, but the key to that, obviously, the bounce back must be settled from your proceeds. So any application you make must make clear representation that you acknowledge and understand that fact, just in case the bank might think you're trying to pull a fast one and have 2 government-backed loans, which obviously you cannot do. So they're amazing rates, amazing deals. One is super easy to do. One is much more complex. It's more a standard deal that I do or do and can do on a daily basis. But both are good products available presently. Some stats for you, just to try and give some gravitas to where we are. 963,000 applications since start. We've only managed to agree 745,000, so that's sort of not a particularly encouraging figure. The other stats, that's in C-bills. That's been primarily lifted with bounce back, as you'll see. because prior to bounce back being announced, our acceptance rate at the start of Sybil's was I think it was 0.035. I think somewhere put it down here. Yeah, 0.035%, which is staggering. So it wasn't even 1% of what was getting put through. Some useful trivia questions that you might like to use in the years to come. 23 small businesses, SMEs in the UK, 3 months Sybil's, 963, as we said, that they've looked at, 330 budget, billion that is, and only 31 billion has managed to be lent so far, which is less than 10%. Staggeringly, 0.35, which is what they were running at. The bounce back has come in and obviously lifted that massively. Barclays now reporting, or were reporting, they were getting 200 claims per minute for bounce back loans. When the government told us to take mortgage holidays, the banks were receiving around 1,600 calls per hour for people seeking 3-month mortgage holidays. Again, Barclays advised me the other day that in the last 8 weeks, they've lent more money than they've lent in 7 years of trade. This isn't designed to scare, I'm just sort of trying to put some focus and perspective of where we are as a situation, and the impact, because obviously all of this impinges and comes back to buy-to-let situations in terms of rental income, tenants, and obviously your own yields that you're applying on your properties as you go forward, and to the security of your client base. But you know, the fact, you know, we are doing business. There's money out there. There's money to support. Some of it's easy-ish to get, but it's not all simple and straightforward. So yeah, that's the rest potentially. Mainstream funding. We do all sorts of funding from. I mean, I've got a list of about 258 lenders, from asset funding through to soft asset funding through to secured property to development for buy-to-lets, HMOs, all that sort of thing. More specifically, cars, agricultural, construction. As per the screen, I'm going to read out what's there. But basically, we cover the gambit in terms of lending. Appetite of lenders has changed, not for any other reason. If you look at non-secured debt, we had about 2,000, nearly 3,000 lenders out there. They have pretty much so evaporated as presently things stand. That sounds scary, but they're only doing the same as they did in the credit crunch and in previous years, where they protect their own selves. It is a little bit more complex, where people are asking for payment holidays. So what the lenders are doing is basically ring fencing their own situations to try and contain their own issues, because they've all got bills to pay. And their own blockers and the backers who might be sort of saying, well, make sure you don't lend anymore, just get in and collect in what we currently have outstanding, which we would do if the roles were reversed. Have disappeared, as I've said. Buy-to-let availability of products has dropped. That's another area which has gone down. So what that means is that an application that you make to a lender going forward has to be sharper than a pencil, has to be exact, very well presented, covering any of the eventualities. So all those questions that you may have had historically about old applications, you want to make sure that any application you make is more refined and it covers off the question before it's asked. I did a Sybil's loan application for 350 for a client that has one of these trampoline parks. We spent 4 days doing the application, 29 pages, and he got 4 questions from the bank, and then the deal was agreed. That's not me singing my own praises, but we work hard to produce a good product, because I can't paint and I can't sing and I can't dance terribly well, but I can do a bit of paperwork quite decently. So I have to sing what virtues I have. Commercial mortgages are coming back, helped better by the valuations, being that the surveyors who were previously confined to barracks were doing desktop valuation. We saw valuations on properties being a bit conservative, but they, good news, have been released because they're now able to come out. And of course, they removed one of the conditions of their PI cover against obviously diminishing market situations where the valuation may be deemed to be incorrect or unrealistic, which from the credit crunch was an area where they got pasted very simply, and they're very cautious. So that's been relieved and gives us support and confidence when looking at properties and when we're seeking funding and the funders. Development funding, again, a reduced number of players in the marketplace. I don't think that's all bad, because I think people were getting a bit silly in terms of what they were trying to push through. I think it dilutes the whole position to have too many cooks. It spoils the broth. So I think the fact that we have a slightly smaller number isn't bad. It just means we've got to up our game in terms of presentation. Asset funding, it's all broadly the same. The key one in mainstream lending presently for businesses, obviously the cash flow funding product, where that is an issue, and obviously that, i.e. factoring, invoice discounting, where they are spending more time now to try and secure facilities, because they're a bit more uncertain as to if they're going to get paid. Likewise, insurance for that product has become more of a difficult one, because obviously Dun and Bradstreet ratings have unfortunately dropped somewhat. So obviously credit limits have reduced. In focus, development funding, this is what we normally do. Assistance with the modelling, structuring, the proposing of each structured finance deal. We give guidance at all stages, from pricing, budgeting, controlling, reporting, to the lenders, working with the QS, helping with cash flow timelines, and basically making sure the deal stays online. Most of the sites that I work with, I go around and I photograph and sort of send the photographs to the lenders, so they've got an updated background, pictures and details of what's happening on site. So when the QS lands on site every other month or every month, he or she is aware of how the site should be progressing. And obviously that heads off any problems. If you're running behind schedule, we can quickly swoop in, talk to the lenders and say, look, there's a slight wrinkle. Can we sort this? Because obviously if the lender finds out and we haven't informed, or you haven't informed, obviously they can get a bit prickly and a bit unhelpful. So it's all about relationship management, working with the parties. It says in there, working with lawyers and lenders with a good level of knowledge. My legal background and accounting and finance background bodes well from all aspects in this regard, to ensure smooth running of proceedings. Support and steer are basically keeping everybody on track, as stated.
Can I just interrupt? We've had a question come through. Who is the lender?
Sorry?
Who is the lender?
Who is the lender?
Who's asked that question? Can you unmute yourself and confirm?
I'm muted.
No, you're unmuted. We've had a question that just says, who's the lender?
Yeah, far away, whoever that question's from.
Olaronke?
Forever hold your peace. Sounds like a wedding.
Yeah.
Oh.
Hiya.
Hello.
Yeah, hi.
Can you just,
Yeah,
I
was just asking about who is the lender, like who normally do lending.
Who is the lender who normally does the lending? We've got a range of lenders, of about 250 available. So it's very difficult, and in terms of property, there's probably about just over 100 odd in property alone. So unless I specifically understand how you mean who the lender is, I mean, each lender has their own unique level of appetite and interest in what's being proposed to them. After 30 years of working with these guys, you kind of get attuned to where they are, well, where your deal will be best placed potentially, and the structure of what you're looking to achieve. I mean, I have one client that's looking to convert a number of properties into apartments and retain those as an investment product for themselves. So it's not your normal do up and flip and sell. They're looking to convert that back into something that they're going to have as a long-term investment. So that will need a front-ended and rear-end loaded product that is simultaneously signed off and bolted together, so we can seamlessly work from one and then switch into the other facility. I've got another deal where a client is looking to buy a property on a bridge, then develop. So that's a bridge to develop, and then obviously potentially to sell. But obviously as a fallback, we always look at can the client, if they have to, convert them to a buy to let. So if things went, say things took a slide in selling of properties and the property values dropped, he or she could protect their own asset by switching in the buy to let, do a year or two with that, and then see how the land lies there afterwards. So we will find the right lender. What we do in terms of lending is we'll produce a suite of criteria, rates, terms, etc., from the various lenders that are relevant to your project, given the project value, the location, the team experience, all the geography behind it and the tomography. So as we go to the right, hopefully to the right lender, to then give you the deal. So that might be 15 different lenders that are offering. We would do it, and obviously we'll go through with you the various terms and conditions down to legal fees and survey fees that they're prevailing. Does that answer your question or help? I presume.
Yeah.
That's not me. That's not me being evasive, but it just, each lender is different, and if you go down the high street, there's, I don't know, 8 Handelsbank, Barclays, NatWest, TSB, and Midland, whoever else. There's quite a few lenders at the moment on the banks on the high street. So obviously you could go into any one of those, and each one will have a different take and a different view. But we will try and construct, which is the reason for all the detail, a bespoke package and a bespoke structure. It takes time, it takes effort, it takes a great deal of joint work together as a team to make it work. And I know everybody keeps saying team, and I hate it, but the reality is we're a team member of yours until the project's finished, because we have to make sure it finishes on point, A, hopefully to do another deal with you, and B, more importantly, to make sure that you finish and achieve what is the goal you've set out to do, and thirdly, that the lender gets paid and everybody's happy, because happy people make happy campers.
Okay, yeah.
Okay. And conveniently enough, this is what we will produce for you. This is a comparable table. So you'd have Midlands, A, Midland, B, NatWest, C, Lloyds, D, etc., etc. So the various lenders will show you what terms they're offering in terms of refinance only or whatever, 5-year fixed. We'll go through the rates that are available, monthly fixed rates. We'll go through the securities that they're looking, i.e. first charge or second charge owned, or whatever the structure is. Importantly, arrangement fees. So we detail day one what fees are being leveraged by the lender. Equally as important, we'll then look at the additional fees, because this is all about structuring when you're doing a development, is to have your spread of costs and your spreadsheet of what you're going to actually spend, so we know if the job is viable from you, for your own point and from the lenders. So we'll see what valuation charges have been levied, legal fees, etc., etc. I've tried to write it down to make it so I don't bore you to death reiterating what's obvious. But everything from application fees, etc. So you have a clear understanding of what potentially you face in terms of costings, and a choice, hopefully. I mean, that's not to say we don't have a choice. You might only have one lender that's going to fit what you're doing, but we will seek out as many as we can and at least cover our options for you to make sure it's a holistic approach and you get an all of market as best we can offering. Any additional charges, and then we'll go through any legal fees, and hopefully we'll state payments. I think this payment 677. So you have quite a bit of information day one. So you have definitely a situation where you can make an informed decision. We can then talk about the development, the rationales, the areas, what we're doing, the comparables, whether it be rental comparables, and we can look at yields, or we look at pure sales. So we're buying to sell, to flip, and to retail out, or turn into an investment. Whatever it is you're looking to do, as a group, we sit down and basically make sure we sign off from all points that you're all comfortable and happy what we're doing. Because, as I say, it is a tripartite arrangement between us at that stage, and that tripartite arrangement extends to the developer who you're working with. We'll work with them closely to make sure they produce their PI cover, they produce the insurance, public liability, that they've got history, they've got a decent CV, the people that they're retaining are working with your interests at heart, i.e. the properly qualified Corgi heating engineers, or whatever the comparable is these days. They are fit for purpose. Therefore, ring fencing and protecting, because we have to ring fence and protect you. You're our most precious asset, really, in all regard. And as I've said, close attention to detail ensures regular reporting to client management, ensuring the smooth transaction for all concerned. In the event of a problem, we are at early stages effectively and promptly to fix problems. And by God, can they happen from every aspect, which, not drama, that's just the way it is. Navigating. Where do we start with that? There are three things that obviously generally we are obviously cash flow, saving money. That's obviously a priority these days, and long-term measures, which kind of touches into civils and bounce back, but business management from an accounting point of view, now put that hat on for a moment, is all important. So, from our perspective, we can give support as details down below from employments, VAT, grants, managing clients, furlough processes, and obviously assisting with lending. So we can kind of give you support in niche areas, very common areas, or areas of sensitivity where you have a tax investigation and suddenly you have to get the forensic scope out to assist. Why work with me? I'm a good looking chap, it makes sense. Independent, so therefore I have no vested interest in dealing with Lombard or NatWest or anybody in particular. I just want to get the good deal that gets me a client on the board with the deal done. The client is happy, successful in what they do. The funder does their bit, you do their bit, and the three bits added together end up with a happy client, as I mentioned earlier. Very important to me. We can leverage off your existing assets by way of refinance or remortgage products. Obviously, consideration is always given to your existing lending if you have any. You don't want to be compounding debt upon debt, because that isn't really a recipe for success. Sometimes necessity, but not necessarily a success. I've got lots of good relationships with lenders. Been doing the job for 30 years. I give lectures to Barclays and to Handelsbank about overseas trading and unique structured trusts and various other bits, only for the fact that I've done it for a few years, so it tends to work quite well. Commercially minded, I love a problem, I love to solve a problem, I love to get involved in providing solutions to life. I usually get stuff that nobody else wants to do because it's too much hassle. I enjoy the hassle because you come out with a much more satisfying result. It's not about money, it's actually about making a difference to people's lives. That's what's important to me. I manage and consult and work in different businesses, so therefore we can give quite a global support to you. Who are my regulatory bodies? FCA, ACCA, NACFB. It's a bit like the good, the bad and the ugly. None of them are any good, to be fair. But anyway, they are who we're guided by. Some of you may know these guys, Andrew and Paul, lovely pair of chaps. Been doing quite a bit of work for them in more recent time. The bank job, as we call it, which always makes me smile when we say it. I feel like I'm one of the bank robbers, whatever they are, Bonnie and Clyde, and going to rob the bank. Their comments are on there to speak for themselves. Just straightforward. I'm a tin of beans. What it says on the tin is what exactly you get. We just help you out. We make it work. We make sure it's right. Make sure it's correct for all of us. And I'm risk adverse, so therefore my view is to try and mitigate risk and protect the flank, i.e. protect your bottom. Questions, if you have any? Those are the sort of areas that we can cover: furlough, mainstream lending, valuation, Are there any questions that you want to ask on that? Now is the time.
Hi, Justin.
Hi, mate. All right.
It's Paul. We spoke the other day, Paul Holden.
Oh, well, I've never spoken to you before.
Got a short minute.
On your the Sybils, what's the criteria for Sybils?
Wow, the criteria is unusual. I mean, if you look at the very in-depth criteria, I had a conversation today with HSBC. Phil, one of the directors, referenced to a loan that we're doing for 250. So it negates the requirement for the customer to provide personal guarantees. He was very specific. Obviously, this is a business that is in need of the support. We produced cash flows for them that we thought were consistent with the trends of the shows of public's recovery from the situation, retail business. And they came back to me and they were quite helpful. The guy Phil said to me, listen, the cash flows are good, but they're too good. We feel that you should try and wind it back in a bit, show more of a poor situation, because bottom line is, with the overdraft that the business has of 30 grand, current balance of 20 something grand in the bank, they would not be happy because the cash flows show that the bottom line of the bank is the reserves of about £100,000 going through to late 2021. they wouldn't want to produce a lend which allowed the client to have a reserve, which is like, really? What they would prefer is if you apply a second time for another bounce back loan at a later stage at further cost, and apply for a top up, which to me seems, well, balmy. I'm not particularly excited about the cash flows anyway. I think it's a little bit sort of Jack and Ori story at the minute, because God love us, none of us have got a crystal ball. And I feel it's very difficult and very unfair to get us to try and project or predict what will happen. But the basic criteria, a business that is not struggling, it was a thriving business pre-COVID-19. Questions such as, have you been affected by COVID-19 appear on the form, which seems ridiculous, but there we go. Are you a decent business person? Are you a terrorist? Is the money, quite sensitively, is the money intended for UK use only? So receiving the funds and putting it out to somewhere else is clearly going to be a no-no with them. Is the money completely intended for the business and not personal use? So obviously you can't be sort of putting in the 50 grand and drawing it out and having a holiday in the Seychelles when we're allowed to return to flying. And it's primarily that. Obviously you have to be able to show the company was viable, that it had a cash surplus, and it was financially viable is the key. That you have your cash flows need to be supportive of your recovery. And as I say, the key to the one that I've just done was and he'd been rejected by another Sybil's lender, was that we did a detailed 29-page presentation, which was very detailed, very exacting, and took quite some time. And he's now been approved for 350 grand. So it can be done. Tenacity and determination is key. That is primarily what as human beings are successful and very renowned for, is tenacity, determination, and that spirit not to be crushed or go away quietly. A bit like Winston Churchill, we will not go quietly into the night, we will kick ass. And I think that's what we need to do, and we have been doing. So yeah, I think a well-presented application with all the information, accounts, cash flows, ALIs, assessments of liability and income, i.e. statements of personal net worth, a copy of your buy-to-let portfolio register with all the rental yields, how long the mortgage is, who the detail. I think giving them a full picture from day one stands very well. But that 30 years, give it right first time, and you come back with the right result every time. Does that help?
It does, thank you. But can it be used for future intention, or does it have to be to cope with business interruption, i.e., I know it says it in the title, but can you use it for future intention, or does it have to be to support whatever was happening 86 days ago, which was then curtailed?
Well, it's past, it's gone. Sybil's is done. Yesterday was yesterday, sadly, and we have to look at every day as being the future and the present. We are funding the recovery from this COVID-19 scenario. It's to nurture support, protect and encourage growth. Growth, therefore, that definition of growth would be, as you are now alluding to, future. Because at the end of the day, the whole point of borrowing 100 grand, 50 grand, 10 pence, whatever it is to keep the business going now and going forward. We're all in the same fait accompli. You, myself, Mark, Jackie, everybody on this call have the same requirement. We've got a business which previously was fine. It's encountered not just a hole, bloody great oubliette. And we are now being asked to pay by way of monthly payments in 12 months' time for a loan to keep it going today, if that makes sense. So yeah, you're being asked inadvertently to fund your future, are you not? By definition.
Okay.
That's how I see it. I mean, at the end of the day, if somebody borrows money and they don't spend all of it, and in a year's time, because things have recovered, they've still got a bit of that left, they can either pay that back off the loan, reduce their indebtedness. Bear in mind, there's no early settlement charges, or they might use that to fund something. We're buying a new Ferris wheel to put at our amusement park on Great Yarmouth seafront. That's investing in the future. If you spend the money flagrantly that's an issue. If you have the money and you then close the company 5 months later, and it is deemed, could bear in mind the liquidators and whatnot will have teeth if this all kicks off at a later date. So they will look very forensically at what you do. So use of the money is important. An audit trail to prove that you've acted correctly and properly would be essential, because it's a life changer, that one. Even down to if you receive money and you're taking out dividends after receiving a loan for the company that's in distress, and if it went pear-shaped, that might be called into question. So that's just, you know, an observation, but I think one to bear in mind.
Okay, thank you. We'll have a further conversation on this, I think, hopefully. Great.
I mean, my main purpose in life is to make sure that you don't get into trouble or don't get into problems, and we find a way together to help you through funding everything else. It's what I've done for 30 years. I don't know anything else, Paul. My first key is like my family. My family is all important, and that's all my life's about, my family. People I work with closely, like Jackie, like Mark, like any other clients, their family, because of to think of you in any lesser fashion would be a disservice to you and would violate what my basic modus operandi is.
Okay, great. Thank you.
Hi, Justin, could we stop sharing the screen so that we can see who I can see then if anybody's raising a hand to speak, and then
You want to see who's still awake?
yeah. Not at all. I think Julia wanted to ask a question. Did you, Julia?
Yes, please. Hi, Justin.
Hi, Anne.
With regards to development funding and lending, I'm getting the impression it's probably going to be harder now than it's ever been for a new developer on the block to get some funding. Is there anything I could be doing now to sort of help prepare and get us in the best position ready to approach a lender when the time comes?
Bottom line is, it's never been an easy project. It's always been one where there's been quite a certain requirement to show skill and ability and knowledge and understanding. Because, you know, as I say, I don't just talk it; I actually do it. So I actually do the bricks and mortars and the cleaning up the rubbish after the builder and all the slop and cement they've left behind, and get annoyed at all the stuff that they've wasted and blah 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 blah. The reality is, it's kind of like your Captain America moment. You have to, it's the gathering of your team which is going to be quintessentially important. You need to be able to demonstrate quite categorically that you have would you rather have a doctor of some kind, of physiotherapist?
Oh, almost. Podiatrist.
Oh, I was going to say pedometrist, but I know that's close, but no cigar. So you have good professional skills outside. They don't have to necessarily be you build and paint. Yeah, you have professionals that you bring into that fold, and they are part of your professional team, which is, if you recall earlier in the conversation, my attention to detail, where you showcase everybody's skills and the team you have. One of my things is we look at the team and we get all their credentials, their history, the CV, because they probably thought, what the hell do I want to build a CV for? Because I want to know what he's built. I want some pictures, I want some photograph evidence. So any deficiency of yours, we try and find a way of supporting that by the people, the infrastructure that you have around you. Similarly, you can use the information when you go to get your public liability insurance. You can say, well, this is my team. So instead of you going along and saying, it's me, Billy and Mo mates, I'm thinking I'm going to do this, and they go, oh, I'm going to have you here, I'm going to charge you $3,000. Well, a bit of attention to detail and a little at a time, as everything in life, might save you quite a few quid. So it's all just about presentation. You know, it's the same as we've all do in the normal walk of a life, really.
And I think when the time comes and we've got the right deal, we do have an opportunity to joint venture with somebody as well who does have a track record. So
that's a marriage made in heaven, then, isn't it? As long as you get the dynamics of the JCT correct, and the status quo doesn't become uneven for you. Obviously, it depends on the relationship you have. It might be somebody who you're very close to and you're working almost as friend and friend. Cool. But even with friend and friend, it's always best to make sure you quite clearly categorize the terms of your understanding with each other, because things can sometimes get a bit blurred or lost or missed in miscommunication.
Sure. Yeah.
So no, it doesn't adversely affect. And yes, the mortgage market is hard, the lending market is hard, but I don't think it's really any harder Just we've got to up our game. We've got to, the challenges are no different to buying the right property, getting the right teams, buying the products at the right price. You know, that's never changed and it never will. It's down to our dexterity on the phone, our desire and willingness to get the project done. We have to make sure that the project starts on Monday. We shepherd that project through. We manage it, even though we might have a manager in there, but we project manage effectively ourselves and make sure that people turn up.
Yeah. Okay. And typically, you know, from all being well, typically how long does it take from first approach to a lender to actually getting the money, to actually getting it seen?
I reckon probably about 12 weeks. But bear in mind, you've got a legal process as well. You're going to have, obviously, with discussion. Paul, we spoke to a minute ago, you know, I've briefly spoken to him. You have a conversation. You would then go to an application process where you draw all the elements in for the cake that you're going to make, present it to lenders in terms of market to get their appetite for that.
Yeah.
Then come back with pricing, indication of terms, protocols, procedures, because each firm is different. The drawdown process might be different. The QCs they might want to use, i.e. quantity surveyors, sorry, QSs, not QCs, QSs, they'll all vary. So we come with the elements and we know what we're doing. We work a game plan. So by the time you've done that, it's going to be a couple of weeks back and forth. Once you've then agreed with the buyer, you've got 6, 8 week, 12 week, as long as there's no problems. That is if there's planning. Presume that there's planning in place. If there isn't planning in place, we do all our bits. You complete on the house on a bridge. You then apply for your planning permission and so forth and so on. So it's kind of a nuclear fusion of transactions. You know, each one is directly correspondent to the next. And if you get them all in the correct sequence of events, you get this huge big bang at the end, which is it starts.
Sure. Brilliant. Okay. And is there anything I could be doing with yourself in terms of a fact find exercise?
Yeah, I can say. I mean, it's open to all of you. The same as the joy of the academy that I'm very privileged to be allowed to talk to, but you're all part of it. Is there's a collective group of experienced knowledge that is huge and dexterous, and you have a wealth of variety of experiences. So yeah, we can generate paperwork that will give you the ability to start formulating a plan. So a sort of a shopping list, as it were, yes, with to help you structure cash flows, to help you structure. I mean, I can do I would say I'm director in an accountancy firm, yeah, which is a fair size. Director of a finance company, I work in litigation, so we can contractually look after it, accounting wise, help you to structure the cash flows. We can source the funding and marry the three bits together. It's all about timing and work and contingency. But yes, there is infrastructure available to help start the battle or get the process working in mind.
Fantastic. Okay, I'd like to perhaps connect with you offline and proceed with that.
Well, I think your other half's connected to me on LinkedIn. So yeah, so whichever way. Jackie's got my details. So yeah, you're more than welcome. I'd be delighted to have a chat.
Brilliant. Thanks, Justin.
Not a problem. Anybody else?
Any other questions?
Hi, Justin. It's Neil. Yeah, thanks for that. I just had a quick question about standard, well, I guess HMO mortgages. So yeah. I'm looking at getting an HMO mortgage now, and it seems like it'd be good for us to have a conversation, see what you can offer. So I guess I was curious as to what's different, you know, from your service as opposed to just going out to the kind of the money supermarkets or those types of things. Do you have access to a broader range? You know, typically see interest rates?
That's probably straightforwardly answered. You know, we have Marks and Spencers, you have Tesco's, you have Sainsbury's, and you have the Co-op, and anything else and everything in between. I don't purvey to be Marks and Spencers or Sainsbury's, but you know, my haberdashery has as much as everybody else. I like to think that I give a cut above the rest in terms of support. The client, well, the statement from Greater Minds from Paul and Andrew, they're one of your own, so you can ask them what they've had from me. So it's not, I can sing my own virtues because I don't really know much about anything else about myself, or about myself more than myself. So I can say how great I am. I believe in making a difference to people's lives. That's important. We take time, we work together. Nothing is too much. And that's the key. Yeah, there is charge, there is cost, but we all sit down and it's all agreed, we know what we're doing. But by the time you finish the process, there's a lot of work has to go in at my end to make sure that your end happens and you achieve what it is you want to do, whether it's an HMO, whether it's a buy-to-let, whether it's a development, or whether it's just buying a piece of land, getting planning permission and turning it for a profit, or buying a vehicle, or accountancy issues, the list goes on. So I provide, I believe, a good, holistic, rounded service. And that's not just because I'm fat, but I do. I provide good service all around, I believe.
Yeah, okay, thank you so much. Yeah, we'll probably connect. I think we'll get your details from Jackie or something, and maybe we just have a chat about what you may be able to offer for.
Yeah, well, I think
we can
the first process, Kevin.
Sorry, I didn't mean to cut across Neil there. My question is quite simple. Whereabouts are you based geographically, and does it? I mean, I presume you travel, and does it really matter if you're based up in Aberdeen and we're down in Kent?
No, I spent October 4 weeks in Tunisia working for a firm. So have keys, can travel. Yeah, very simply, I run the business. I'm open Monday to Sunday. I'm available 9 o'clock to 10 o'clock of the day. There's no excuse not to ring me, and there's no excuse me not to ring you back, because I work for myself, have done for 30 years, fairly successfully. And the only reason I've stayed in business, work for myself, is the fact that you give the level of support that you say you do. And being a sole trader, there's nowhere for me to hide. So if I cock up, guess what? You're the first one to report back. So yeah, I'm only as good as yesterday. It wasn't good that much yesterday either.
Justin, I have another question. Sorry, I'm going for two here. This is Paul. Okay. Have you come across the EWSI certificate, which is basically, I read about recently that it's making very many lenders very hesitant on anything above, in any kind of apartment block?
Well, there's a lot of movement in different regulations about a great many, especially with the Grenville fires and stuff.
Yeah.
That they've had an impact. I actually work with a company. I've been working with a company and a hedge fund regarding a product which is a non-inflammable decking product and wall cladding product, which we're bringing to market. That was about to go live in February and was basically scuppered with the Chinese and the old COVID-19, the world closure. So that came to a very abrupt and unpleasant stop. But that was a product that would have addressed a great many concerns and issues and would have given people an opportunity to source another product with the volume available to it, and obviously negate potential worries of that themselves, i.e. of a fire or anything similar. So there's a number of rather good initiatives I've been working with that will bring added poise to the development companies that have issues with landlords, with tenants, with all that sort of stuff in terms of structuring and in terms of products that they use, because people do stupid things and we always get blamed.
But that doesn't help. If you're either buying or selling an existing apartment with a balcony or some kind of cladding, are all the lenders just shying away from that, saying, I saw it quoted saying, well, these flats are worthless now in terms of lenders?
It's a good way. It's a good way. It's a bit like NatWest. NatWest were looking at buy-to-let mortgage. Was it buy-to-let or development? I think it was development lending, and they said, we'll do the deal for you, but we want a 45% deposit or 50% deposit. So that sort of kind of says I'm in lending, but I'm lending at my terms. So they're still there in the marketplace, so they can show that they're there, but it doesn't mean they're actually doing the business, because those terms, they're not representable. So I think in some respects, some of this will be down to lenders reacting to the situations that have occurred, and obviously other lenders protecting their financial positions by trying to keep lending down. I mean, it's like HSBC, NatWest, all putting on there. We've got an extra 5 billion on the telly last night, an extra 5 billion for small new start businesses. But by the time you've gone through the very rigorous process, I don't think they'll have lent much of the 5 million in the next 6 months, especially given the backdrop, because it's not just you a lender looks at, Paul. He looks at who you're dealing with, your suppliers, who you're selling to, the end users, tenants. The tenants are under a degree of duress at the minute with job security. So it's not a straightforward lend anymore, because there's quite a few variables. So whilst we can predict, cover, and speculate a lot of it, there is a certain aspects that, you know, at the minute are kind of unknown, but we will find a way.
Yeah. Okay. Thanks.
Okay. The phone's ringing. Anybody else want to throw dispersions or otherwise at me?
What is the maximum credit or minimum credit?
The minimum credit
Yeah.
for what sort of lending are you specifically thinking?
I'm not familiar with the credit thing. So I just wondering, that's all.
Are we talking about finance credit in general, or finance, or what are you specifically thinking of?
Finance in general. Finance in general.
Well, obviously you need to have a clean credit register to start off with. That's probably the basic one to go from. A bit, as Julia said earlier, whether you're a new start or not, but you have a strategy, you have a business, you have a good presentation, a good application, and a good supportive business plan to give to a lender. Because what we're doing is you're making an application to somebody on Threadneedle Street or on King Street in Manchester who doesn't know you from Adam, and in many ways doesn't really care, but you're a finance application that's landed on his desk and it's Monday morning and he doesn't know you from Adam. So we've got to create a picture, an application that will inspire and engage them for 5 minutes to give them hopefully the view that, you know what, let's have a go with this client. It's all about the presentation, but certainly clear credit, financial security. You don't always have to be a homeowner, but it's going to help, just more so they know you're not going to run away. Home phone number, strangely, is one of the top requirements of lenders for their credit scoring, which is very strange. After 30 years, I still find that amusing, but a home number evidently is a good thing to have. So good credit, a home telephone number, and we should hopefully be able to do something.
Okay. You mentioned business plan. Do they accept that? Well.
A business plan?
Yeah.
Yeah. But that would,
yeah.
As I mentioned earlier, the business plan needs to be, you know, fairly beefy and quite directed and specific to what you're doing, and have contingency in there for the what if moments and if problems occur. But yeah, business plan, a good structured application. No different if you're going to buy a dishwasher from Hughes or wherever. You know, if you do it on 0% finance, they want all your details. It's the same thing. It's just a bit larger, the amount you're borrowing.
Okay, yeah.
Does that help?
Yeah, that makes sense. Yeah.
Just a quick question, actually, on the when the government announced that lenders had to give a minimum 3-month payment holiday, whenever it was 3 months ago. What's your view on the effect of that if anyone's taken advantage of it, let's say, for future lending?
Are we talking buy to let?
Yeah, the investor market.
My view is 1,600 applications per hour for mortgage holidays. There is a huge problem from the mortgage market, private residential mortgage market currently. If you as a landlord approach your lender and say, I want a 3-month holiday, yes, the government have mandatorily said to them back in April, whenever it was, give them a 3-month holiday. And they've said that without reservation. And yes, therefore, the lender is duty bound to support that request. What you must consider, and it's maybe some of you might already have thought this, but the lenders, when you approach a lender as a buy-to-let, they expect that you have sufficient money to run that property when it's rented, do the repairs, and when it's empty, to be able to support the rent until it's re-let. This is kind of one of those empty moments. So they would largely ostensibly expect you to have sufficient reserve to carry the house in the time where it's not let. So that's so my thought, or my response to your question, Mark, would be, I think it would be an issue. I've had a client that had 3 mortgages buy-to-lets agreed by a lender I shan't mention. He went to them as instructed 3 days afterwards by the government to ask for a mortgage holiday. They said no, and they withdrew all the acceptances. So that had a catastrophic effect. And I also think, because I'm an underwriter back in the 90s for Barclays Bank, I think that the question that will appear on a Q&A of your applications going forward, whether it be residential development, whatever it is you're doing, will be, have you or did you, through the COVID-19, request a payment holiday? Yes or no? And at that point, there'll be a big grey box which said, and other, which is a bit you'll have to fill in, which will be the explanation of the who, what, why, when. And I think that will have a marked effect.
Okay.
Hey, Justin, I've got a question, if that's all right.
Yes, Elizabeth, no problem.
So my business is in the events and hospitality sector, and so we haven't traded at all since March. I was considering a bounce back loan in order to help me get my first investment property. However, would this be seen as misusing the bounce back loan? Because I've seen there's been talk about being taxed 100% and fined if you're found using the loan incorrectly.
Yeah, misuse of funds in any situation is a no-no, especially with a lender, especially when there's a document trail. If I give you 50 grand cash, no receipts, and you go off what you do what you like, well, then nobody's any the wiser. But this has got a big audit trail as long as the M25. So if you're going to borrow the money from the government, because this isn't, the other thing, this isn't borrowing money from Fred Blogs XYZ Finance, you're actually borrowing it from the government, backed by the government. So guess what? The revenue, the government people, they're going to have teeth, as I mentioned earlier, and they will come after you if they feel there's been any suggestion of impropriety or you've done something you shouldn't have done. However, the purpose of the buy-to-let, what is the is this purely a buy-to-let, or are you looking to put your business in it, or is this an additional business? What are you looking to do?
I'm looking to get a HMO, but no, within the same limited company.
And you're thinking within the same limited, okay? But you're that's not actually directly correspondent to your operation currently.
No.
I think you might need to err on caution in that respect. Obviously, you guys can do exactly as you want, but at the end of the day, if it does have a problem later, I put in my notes earlier. They are viewing the bounce back loans by a leading liquidator, reckoning that 37% of the bounce back loans will be toxic debt. All right, I'm great with the numbers and percentages. So that's 40% at minimum will be bad, and they'll be bad for various reasons. Moreover, with misuse of funds, people, because it's self-certification, you put in your turnover, it isn't checked, they give you 25%, you put in 50 grand, you get the figures, you actually turned over 5. And the problem will come in 12 months' time. It's kind of a percussion grenade. I pull the grenade, it'll go bang, and then half a mile away, then the shock waves will hit. That will be 12 months when people suddenly have to pay £700, and they guess what? They don't have £700, or, well, I couldn't afford that in the first place. They can't claim to be missold because you're negating a lot of your rights under the Consumer Credit Act by doing the bounce back loan. So in summary terms, I think just be a bit careful what you are contemplating, or be upfront about it and show it as part of your business plan, but make disclosures so the lender understands what you are intent upon doing. It might be better that you look at a CBILS loan, which will give you an opportunity to correctly showcase what you're looking at. And then if you get a no, you're getting an honest no rather than a covered yes. Does that make sense? Okay.
Yeah, that's great. I might have a little chat with you then.
Yeah.
About that. Thanks.
No problem, Elizabeth. Anybody else? Presently, thank you very much there for putting up with me boring you guys to death. There is a lot of good stuff going on. I think there's a lot of opportunity. I think there is a degree of reason to feel happy to a degree, because we can make the best out of this. And certainly we have to. They've now found some cure to try and reduce the severity of there is positivity. It's certainly been a hell of a ride. I think it's from First, Second World War, all the stories I've heard from father-in-law and all the rest of it, this is up there with one of those moments. It's like a holy doodah. But we're all together, we're all still alive. That's the main thing. We all will go on to greater and better things, irrespective. And I think collectively as a team, you have good people to lead you, Mark and Jackie, etc. Who will lead you in your campaign to be successful. And I think if you follow the plan like anything, stay true, stay honest, you will only succeed. And if I can help, I'll be delighted to assist. So thank you.
Good.
Thank you, Justin.
Thank you.
Thank you,
Yeah.
Justin.
Thanks.
Excellent. Anybody who needs Justin's contact details, just drop me a line and I will let you have the detail.
I've just
Um,
messaged
All
both
right.
yourself,
Well, hopefully I'll speak to you
Justin.
again and we'll give you an update later on if the guys want me to do so.
Okay,
Thanks,
right.
Jen.
Thank you.
Excellent.
Thank you, Justin.
Thank you.
Brilliant.
Thank you, guys.
Thank you. Bye-bye.
Thanks,
Bye-bye.
bye.
Bye-bye.
Thanks, Jackie.
You're welcome.
Jackie, I've just messaged you on Zoom if you've got Justin's email address by any chance.
Oh, is Justin gone?
Yeah.
Yeah.
Yes, I will. I
Because
don't
I
know
just
off the top of my head, but I will.
I tried the one in his presentation and it's bounced back.
Oh, which one is it? Jay.
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 Yeah. Jay at smefunding.co.uk.
Yeah, that is his.
Yeah, it's bounced back for some reason.
Oh,
Okay, I'll try it again. Yeah, I got it right.
just
Okay.
had another. Oh, yeah, that's your message just coming through. I will check it.
Okay.
But I'm pretty sure that's the one that I use. The SME. Yeah, definitely.
Okay. All right then.
Okay. Did you find it
Thanks
useful?
very much. I did, yes.
Good.
I'm just trying to get all the things in place and get ourselves in the best position, really, to
Yeah,
when the
absolutely.
time comes.
Yeah.
Brilliant.
Good.
Okay.
Okay.
Thanks very much. All
Talk to
right.
you soon. Bye. Bye.
Bye.
Cheers, Julia.
Bye, Mark.
Bye.
I thought Justin was going to hang on, but clearly not.
Yeah. Going to stop the recording?